as a part of our special Singapore coverage, we spoke to Singapore's exchange, the Singapore Exchange. Listen in.
We are today, I believe, the only stock exchange which has a presence on the ground, both in Delhi and in Mumbai. We are one of the largest shareholders of the Bombay Stock Exchange. So we have, I think, a deep and intertwined relationship with Indian capital market activity. More recently, as India's Look East policy becomes more of an Act East policy, and which is why I imagine Prime Minister Modi is here in Singapore at the end of a long series of tours. One of the things that's most interesting is the fundraising outside of India. So in the bond market, for example, 80% of all Indian offshore bonds are listed on the Singapore Exchange. And they're listed in 6 different currencies, not just in US dollars. We have bonds in Australian dollars, Singapore dollars, US dollars, yen, euro, even the RMB. And this represents 10% of the bond listings that we have. And of course, the newest flavor, the 7th currency that's going to come up, the masala blonde, is something that we're also looking forward to.
So what are the efforts being put into place to increase masala bonds? Can you give me any numbers as to what is likely in the next 1 or 2 years within Singapore?
Well, if I look backwards, we have, as I mentioned, listed 80% of existing Indian offshore bonds. That amounts to something like 65 billion US dollars. But the most frequently quoted number is the infrastructural needs that India has, and that runs to the trillions. So the appetite for these bonds, I believe, is very strong. The gap that needs to be bridged is one of education, facilitation. This is where market infrastructure comes in. And very importantly, familiarity with corporate names, structuring of these bonds so that offshore investors are prepared to invest in them. And this really is fundamental to the bridge that Singapore plays as a capital market and offshore capital market infrastructure in servicing India's capital markets.
Okay. What is being done right now to be able to increase offshore bonds such as masala bonds presence within Singapore and vice versa?
The most important thing is education. So with our bond listing teams, it's going around with lawyers, structurers, supranational banks, making sure that we are able to tie together issuers of these bonds from India to investors offshore who want to find out more about the structure of these bonds.
Okay. All right, fair enough. You mentioned BSE. You have about 4.75% stake in BSE.
Yes.
Is that a strategic investment, or is it a one-off portfolio investment? And going forward, would there be an option, or would you look at increasing your presence or increasing your stake in BSE?
I would say that the Singapore Exchange in general isn't a financial investor, so we are very committed to the development of India's capital market. I think our stake in BSE could be viewed as strategic.
And speaking of commodities and trading, we also spoke to Singapore's largest agriculture commodity traders, Olam's International's founder, to understand what his perspective was on food inflation and food subsidies in India. You are looking at expanding in India. So you have about 4% of revenues coming in from India. Could you give us a sense of the exposure or the commodities that you have larger exposure to? And what are the areas or what are the commodities that you would be looking at expanding in within India?
So we are we are in about 10 states in India, and we have about 13 manufacturing and processing facilities within the agricultural supply chain. Our large businesses are in the edible nut space. We are in cashews, we are in peanuts, and then we bring in almonds, and we will be bringing in other edible nuts like pistachios and hazelnuts. Globally, we are the largest edible nuts company in the world. We are also very active in India in coffee. So we have 2 curing facilities and processing facilities in coffee in the major producing regions in the southern part of India. We are engaged in cotton ginning and domestic trading of cotton, import of cotton, export of cotton. We are in sugar. We have 2 sugar milling facilities. And again, in all of these sectors, when we are in grains and rice and everything else, we are looking to, we are in spices, so we are looking to invest further really in food processing. And that will require some enabling environments. So for example, in cashew was a manual processing production system in India for 6-7 decades. India has established itself as the hub for cashew processing in the world, but all of it was manual processing, which was not very efficient, not very effective. So we have now combined proprietary technology from different parts of the world, from Brazil, from Vietnam, from India, to mechanize that processing as much as possible to make it more industrial. And therefore, in that regard, labor reforms are very, very important. Today, there is some inflexibility in the labor system in India, and making it easier for people to scale capacity flexibly or bring down capacities depending on world market conditions and situation would be important to attract more investments in India. If you see the rate of growth of the cashew processing industry in Vietnam compared to the cashew processing industry in India, Vietnam has had a faster rate of growth. And that is largely because of the labor systems in Vietnam are more flexible, although again it's a more socialist state, it is more flexible than the labor systems in India. So with the right policies and the right enabling environment, GST, labor reforms, agricultural infrastructure investment, you can really transform Indian agriculture. And that will be very important to meet the challenges of food security, water security. India has nearly 18-19% of the world's population. It has only 7% of its fresh water. So how do you maximize crop per drop of water? How do you improve water usage efficiencies? It's very critical.
In terms of, there are, as you said, efforts that are being taken, but do you believe that given the kind of efforts that the government is taking right now, given the kind of reform that the government is taking right now, do you believe that the Indian government will be able to arrest food inflation at least in the near term, or do you think that's a 2 to 3 year game? What is the timeline that you're pegging to be able to arrest food inflation?
Oh, this is a much longer term game, investments in agricultural infrastructure, investments in agricultural research, partially modernizing the farming systems. These are all long-term objectives. And the problem is most governments in most countries are elected in 4-year cycles. If they take these long-term decisions, it is not going to serve them well in their term in office, and they want to get re-elected. So a lot of these long-term decisions are sort of postponed. And that's why I like Singapore, and that's why we relocated our business to Singapore. The government takes a 25-year view. They take a real long-term view. It's not about the next election cycle. And in the 30 years that I've been out of India, I've never felt more optimistic about India in terms of what this government is trying and seeking to achieve. But we should not have false expectations, and the government should think long-term and put in place the policies and programs that are required to make India competitive globally in the long run, and not succumb to react to short-term pressures.
So how long would you give the government? There's some green shoots in the economy. The cat has been arrested to an extent. In terms of the overall GDP figures, we are expected to grow at 7.5%. But how long would you peg economic recovery? Or a larger sustainable economic recovery, let's say that. Would you give the government a mid 3 to 5 year term, or would you say longer than that?
Our view is that we are living in a world post the global financial crisis, which is going to face a prolonged period of subpar growth. So the trend line growth of 4.5% that we were seeing globally before the global financial crisis is now between 2.5% and 3%. So there's a dramatic realignment of global growth expectations. And I think given the macroeconomic pressures globally, we have to reconcile ourselves to a prolonged period of subpar growth. Within that context, India growing at 7.5 to 8% is remarkable. I mean, I don't see any other part of the world where a large economy...
we meet that
So I think between 7 and 8% India will do. And that is remarkably strong. But India needs a higher rate of growth given the additional numbers of people coming into the working age population. You need even a higher rate of growth. And it is possible for India to achieve it with the right policy framework and the right government policies, because there is a lot of entrepreneurial spirit in India, and that needs to be sort of unleashed, and everybody globally accepts that. And I think with this government we have a chance. The Make in India program, the GST program, I think are all fundamental changes which can dramatically transform the Indian economy. The professionalization of the Indian economy, having somebody like Raghuram Rajan at the RBI, or having somebody like Arvind Subramaniam as a chief economic advisor, and all the other changes that the government has made, gives all of us who are looking at India great confidence that things will be significantly improved.
So all in investors are clearly bullish on India and are betting big in the long-term India story. With that, it's a wrap on this special show. Thank you so much for watching.